Hello and welcome. My name is Joe O'Mara. I'm the Head of Aviation Finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined by James Meyler. James is the CEO with RX Aviation. He's joining us for the purposes of our Leaders Report. I should say we're recording this in late November in Dublin. James, thanks as always for joining us. Before we get into the meat of the discussion, do you want to tell our watchers just a little bit about RX Aviation?
Sure, thanks for having me, Joe. RX Aviation, we're a 100% subsidiary of RX Corporation, which is a Japanese headquartered, very large financial institution listed on the Tokyo and New York Stock Exchange, A-rated entity. The aviation group's headquartered in Ireland. We've teams in Dubai and in Tokyo. We've over 200 aircraft worth around 8 billion. We also have a 30% shareholding in Avalon, and I'm a board director of Avalon as well. RX is probably a little bit kind of unique in its positioning in terms of being a very active asset manager, trading company, as well as a kind of a traditional lessor, and we're very active in the Japanese operating lease market as well, which is really one of our core products.
And James, obviously that's a huge breadth of activity across RX and your investment in Avalon. Can you talk to us a little bit about how you've seen the recovery progress through 2022 and just what opportunities you're seeing out there in the market at the moment?
Sure. I mean, I think as we've all seen, the recovery has been unequal. You've had the US lead the charge early on last year, huge kind of domestic travel and US South America travel. Europe equally domestically had a very strong rebound. And I think more laterally in the year, we're seeing the transatlantic market really come back. Asia is still very much the laggard. Domestically in many kind of non-China countries, there's been good domestic recovery, but obviously China is still very much behind in terms of the restrictions. So it's been a very, very uneven recovery, not just in passenger travel, but I think also in government supports as well, where again mostly Europe and the US seem to benefit more from government subsidies, and that has also then helped with their positions of the airline when they reopened, whereas out in Asia there's been limited government supports and much greater restrictions on travel. So that's kind of been how it's played out. In terms of the opportunities, clearly there's been a really unique market because you've had OEMs reduce production, so there's been a limited supply of new aircraft essentially to finance. But when there has been, the good credit airlines, of course, have basically had a huge demand for their products, so therefore the pricing has remained tight. And then the kind of more struggling airlines obviously are finding it difficult to fund their deliveries, and equally lessors who are themselves recovering from the pandemic are probably a little bit more reticent to take on some of that extra risk. So it's been as I say, an unusual marketplace where the opportunities kind of are, to be frank, relatively kind of few and far between because of the nature of the deliveries. But I think that's going to start to unwind itself as we come into next year.
And maybe to pick on that point, right, on the trading, are we effectively in an environment where the trading market is a little bit dysfunctional? As you say, you haven't had the big players probably selling down the way they have because the OEM side. Just what do you think is needed for that to uncork, and do you think has been that little bit dysfunctional in recent times?
Yeah, I think the pandemic has had so many different effects essentially on the ecosystem that is not just the aviation market, but the lessor market specifically. Typically, the large lessors with very large order books would have a certain amount of trading activity, A, for profitability, B, freeing up capacity for new aircraft, and they kept their growth path from the order stream. What we've seen then has been, because of the OEM reduction of production, but also many lessors early on in the pandemic made what was undoubtedly the right decision at the time to defer order positions as well, given that there was such uncertainty. So by deferring a lot of their 22 and 23 positions, coupled with the manufacturers reducing production so much, those kind of large lessors that have typically fed the trading market have really been unable to sell because they wouldn't be able to meet their metrics for their, their investment grade kind of cash flow positions, and indeed their growth story, essentially, for be it the stock market or again for the bond market for their investment grade ratings. So what they've done is essentially stop trading largely over the last 1 to 2 years. At the same time, then many of the airlines also deferred their own delivery positions, or indeed the manufacturers have slowed down production to the kind of effect that there was very, very limited sale and leasebacks as well. And really the pandemic caused that on several ways. One is the supply chain, essentially, which has caused the problems, but also the deferrals. Then you have essentially a lot of airlines also having gone into bankruptcy restructurings. So a lot of aircraft then maybe got rejected, or they were on power by the hour deals or whatever. So those assets kind of became untradeable for a period of time until those restructurings were successfully completed, and the power by the hour periods have expired or are expiring over the next number of months. So all of those things have kind of come together essentially at the same time for a perfect storm of very limited trading activity. I would believe, though, that as we see Airbus and Boeing start to ramp up production again, and the supply kind of chain kind of freeing up somewhat, now there's all issues at the engine side very much still in terms of deliveries, but as they come back on stream, you could arguably there's almost a perfect storm in the other way now, that because of the bond market being potentially closed or very difficult for raising access to funds, now many of the larger lessors are likely to look to the trading market to fund themselves. And they'll be able to do that because they're going to have the new deliveries coming in. So I think 2023, 2024 is going to see kind of actually the kind of almost the exact opposite of what happened before, where there's production rates are back strong. The big lessors actually will sell probably more than they have done in pre-COVID times to help fund themselves for the new delivery slots. And then lessors like Oryx, essentially, that are interested in buying aircraft that are already on lease more than the speculative order positions we would be delighted essentially to take up those acquisitions. So I think that's kind of dynamic is going to swing full circle basically over the next year.
And maybe to delve into that as it does come back, your thoughts on asset values, right? And maybe that's hard to gauge. We're in an inflationary environment, but maybe not enough trading to properly peg it. And the second bit about pricing, right? We might chat properly on interest rates in a moment, but we've seen them significantly uptick with a lot of volatility, which arguably should be leading into lease rate factor. And anecdotally, it seems to be ticking up, but not at the same pace. Can I get your thoughts on where kind of asset values and lease rate factors are likely to go in the near term?
Yeah, I think it takes a little bit of time for the inflationary effect to come into the aircraft values, especially if you take the new positions. Many lessors and airlines have capped inflation deals, capped escalation essentially with the manufacturers. That will feed in some inflation on new deliveries, but it's going to take probably a bit more time for that to kind of really filter through. On the flip side of that, existing aircraft deals with fixed lease rents in place, the inflationary effect will have some beneficial output on the residual values. Obviously, as the maintenance costs escalate and the part out values and the LLP values and everything will all play out into a higher residual. But the fixed rate leases will be under somewhat pressure because of the cost of funding now. So you kind of have this dichotomy where for new deliveries, you'll see the benefit of inflation both on the delivery price and on the residual value, and probably indeed on the actual lease rates that have ticked up in line with lease rates, with interest rates. But when it comes to existing deals, the inflationary effect, I think, unfortunately, is going to be relatively kind of limited or muted to the residual value side of it because the lease rates are fixed and the funding costs have gone up on those aircraft.
And maybe just holding in there on interest rates and the other kind of challenges we're facing, right? So we speak to a recovery, which is great, and that's driving optimism. But both the macroeconomic and geopolitical environment just is doused in uncertainty. So interest rates shooting up and still volatility. We've spoken about inflation. We've also got US dollar causing issues and oil is moving around. When you're sizing up those challenges around macro and geopolitical, what are you most concerned with?
Ultimately, it's the airline's credit and the airline's strength to be able to survive is what all lessors underwrite in reality. So looking at the airline's ability to be able to continue to fund itself, whether it has exposure, obviously US airlines are somewhat benefiting from the strong dollar, whereas certain emerging market countries, obviously the dollar is very, very penal to them because of the, basically most of their costs, or 2/3 of their costs are in dollars. So typically for lessors, it's really looking at that, the ability to weather that storm. Clearly there's going to be certain geopolitical risks that are uncontrollable, like Russia is and was. But generally speaking, kind of across the spectrum of all the countries in the world where aircraft lessors operate, the geopolitical side, while a concern, I don't think is can be or is the overriding concern that you can control anyway. Interest rates clearly are very important probably for the lessor, maybe more than the airlines. But the kind of the currency side together with interest rates is what could be the kind of the real kind of combination of issues for heavily indebted airlines. Airlines have come out of kind of the COVID pandemic hugely more indebted, of $200 billion more indebted. That debt is now much more expensive because of interest rates. That puts pressure on their cash flow, and then if you layer on top the dollar effect of oil price and or lease rates versus their own currency, it's that kind of deadly combination really of dollar and interest rates being very strong and high is the thing that's going to kind of cause the most issues essentially for defaults.
And looking at that with that lens and those challenges, we obviously had the government supports, which probably pushed out a lot of airline failures. Are you expecting more airline failures in the near term, or is it just too early to tell?
I think unfortunately, yes. I'm expecting more because what you've had is clearly with the pandemic, when things normalized, it was always going to kind of show kind of whether people had the strength and the ability to to carry on. I think we said this probably in the previous discussions a year or two ago. We'd have to wait till things normalized and cash flows resumed, where lessors and banks kind of the forbearance had been kind of come to an end. Then it was going to be a case of people being able to stand on their own 2 feet. I don't think anybody kind of expected that when we got through the pandemic, you would have, kind of what the geopolitical storm that's kind of happened with the Ukraine-Russia conflict and the knock-on effect that's had on everything from obviously oil prices to interest rates and to inflation and to the dollar. So those things have kind of, they weren't expected, I guess, when people came out of the pandemic. All we were worried about was people flying again and how quickly people would fly again. That's happened, as we all hoped and forecast. But the airlines with higher indebtedness and these new pressures essentially on cost means that the ones that either didn't restructure during the pandemic and were kind of battling to get through it, they would have been able to get through it only for this new interest rate environment and the dollar environment. But because they've come out of it so indebted, it's going to be very, very difficult for many airlines to not restructure. So I think there will be quite a bit. Now, I also think what we've seen is, in general, there's been very successful restructurings rather than closures. So I think there's kind of a well-trodden path now for airlines to restructure in cooperation with all of their creditors. And I think that's what we're going to see a lot of through this winter, unfortunately. And there's not really much that the airlines can do about it because they've, as I said, they've limped out of the pandemic, and now they find themselves essentially in positions where the cost base just can't support their current indebted position.
And maybe moving to the aviation debt markets, and you mentioned around the kind of unsecured market. Maybe we'll start there on capital markets. We saw the IG rated lessors fill their boots very cleverly and wisely and cheaply in 21, and clearly post-Russia in 22 in the interest environment we've seen very little. Same on the ABS side. Where do you see that market going? As you say, there will be a need for those lessors to go back to the market, definitely to some degree in 23, probably to a very large degree in 24. As and when they do you think they just pay whatever the basis point increase is generally, or are you worried that maybe aviation finance will be seen as less attractive when the IG rated lessors go back?
I think, first of all, there's going to be the general global macro. There's been the longest period of time in 50 years in the bond market where no bonds have been issued by any company, not just aviation. So this isn't just an aviation specific issue. It's definitely essentially a general market issue. I would imagine that this is going to continue into the first quarter, at least, of 2023, where effectively the market will remain closed or largely closed. And then essentially what will drive the pricing is going to be what very large investment grade corporates that are not aviation issue at, and ultimately aviation will be issuing probably wider than those. So it's going to be a question around what the general bond market is pricing at, as to whether it's going to be an effective or efficient way of funding. The reality, while it is an expensive source of funding compared to where it's been in the last several years, in reality it's not compared to what it was only 3, 4, 5 years ago. So I think that's the other big question mark, really, is that what is the normal long-term average cost of funds for an investment grade lessor, and there will be periods above and below that, but because of how well many of the investment grade lessors have funded, their average cost of funds are at the moment incredibly low. And even with a period of time of issuing at higher rates, their average cost of funds is still going to be very good once the market normalizes some point in 24, 25. And I think that's probably what's going to be the more realistic outcome, is the lessors will use a certain amount of trading to reduce its requirement into the bond market. They will issue certain bonds essentially in 23 at some point when the markets are as attractive as they can be versus their peers in the non-aviation industry. And that combination then will be a higher cost for 23 for sure, but I think, as I say, the average is still good, and as long as they're able to get back to a 24, 25 funding at better rates, then the positions should be sustainable.
And maybe looking then at the rest of the market. So you have the IG rated lessors, you have guys that have very strong parents with lots of backing behind them. What do the other guys do, right? So are we in a situation where scale, which has always been important, is even more important now? And if you can't have that strong parent or that ability to tap unsecured and the other funding sources, that you're playing in niche, right? And you'll just be very challenged to have growth of a significant material amount.
Yeah, for sure. Ultimately, our parent is an A-rated entity. Most of our competitors and transactions we do are investment grade, are essentially owned by investment grade entities, and there is no way that you could be competitive especially in the blue chip airlines where the yields are still relatively tight. You can't be competitive there unless your cost of funds are competitive. So it is simple maths essentially. If someone is paying a lot more for their debt, if they compete at the same level, their profits are less basically. So I think there's no question of that we're back in that where it was historically, where people did play to their niche essentially, and that you can only access large scale funding if you're investment grade or owned by investment grade, and alternatively you have to essentially play in a different space where you're either in older aircraft, higher yielding deals, higher risk portfolios, whatever it may be. That's always been the case up till a couple of years ago. That's if you're going to pay more for your debt, you essentially need to get more income for your aircraft, and the only way you can get more income is to move out the risk profile.
And on the investor side, can I get your perspectives? Obviously, an asset manager, you'd have lots of discussions on the investor side. We had seen probably at the outset of COVID, and it's probably followed through in the last couple of years, lots of interest, particularly in private equity. You would have a good perspective on Japan, given Arix's long history there. Your thoughts on investor profile coming at aviation finance? Any trends post-COVID that you found interesting? Or is it similar classes of investors? Names might change, but it hasn't changed materially.
I think you're starting to see a shift probably away. The private equity guys, obviously, they tend to move around depending on where the opportunities are, and are looking for higher returns and typically a shorter period of time in an asset class. They rightly assumed that the COVID pandemic would give huge opportunities for distressed buying. That actually hasn't materialized, partially because lessors have proven their business models are so resilient, essentially, that even through the pandemic and what's going on, that they're able to remain, kind of sufficiently funded that they're able to survive on their own 2 feet, which meant there hasn't been those opportunities. And also they've seen losses in some of the assets that they did pursue, either because of bankruptcies or Russia and the like. So I think private equity is definitely, reducing rapidly in terms of what we're seeing, either fully exiting or just stopping investment. That is really, we're seeing that happen quite a bit. I think I've always thought this really is that, it is a very long-term asset, and that's why it's suited for many of the Japanese investors, but also for the insurance company type investors. And I think what we're seeing now post-pandemic is more insurance money kind of becoming interested in the space, because they've seen what the space has been able to weather, the kind of incredible disruption to the industry the pandemic caused, obviously the issues now with kind of the geopolitical issues, and that yet lessors have been able to come through that successfully. That suits the insurance company's risk profile. And generally speaking, the yields in reality are not, they're not at the level that typical private equity firms seek, whereas they are actually at the level of insurance companies seek. And for blue chip airlines, new aircraft types, they are actually also relatively low risk, low volatility. So on the basis of that kind of risk profile, the return levels in the high single digits are appropriate for the risk of those asset types and are appropriate for the insurance market. And we're definitely seeing the insurance market money becoming a bigger and bigger player, I think.
And maybe looking at leasing in the macro sense, we have seen definitely a shift driven by COVID on the popularity and importance of leasing. As you mentioned, airline balance sheets becoming more decimated. Kind of crystal ball gazing, we breached the 50% threshold. Do you see that trend line, which is a long-term trend line of upwards, continuing to go upwards? Or do you think it'll come a point in time where as airlines' balance sheets potentially get a little bit stronger, that they're happier kind of bringing more on balance sheet?
I mean, look, I think I've always said to you in many of these interviews that in one respect, the largest hotel groups don't own any hotels, and arguably airlines shouldn't own any aircraft. That actually, it's very possible, I think, eventually that basically the lessors own all of the aircraft. That is a kind of a possible outcome.
You were 60% last year, we're going to 100% now. I'm very happy with this.
I certainly think, clearly some airlines will always either want to own or for whatever reason they have themselves. That may happen eventually, but it may be beyond my time frame. But I do think that certainly the 60% number that I was probably one of the few saying several years ago, I think the pandemic has absolutely made that a certainty, I think, at this stage, where really the only way for airlines to fund their business models are to be able to kind of use the lessor channel for sale and leasebacks and or leasing in aircraft. And ultimately, if you think about it, it makes the most sense because of the flexibility it gives them, the ability to have new products more regularly for their customer, especially in the kind of changing competitive dynamics that's going on now in the world, where you've got so many kind of very competitive low-cost carriers in the world that are offering a good product as well as a good price. That kind of the days of flag carriers essentially being able to just kind of roll out the same product with old aircraft because people were loyal to them is gone essentially. So for them to be able to replenish their fleet more frequently, the leasing channel is still one of the best ways to do that. And it gives huge flexibility to airlines, and also ultimately, as we've seen for financiers, the lessor is a far better risk partner than an airline, because as we've seen the lessors weather all these crises over the last 40 years, because of the diversification of the lessor model, it's a far better risk profile. So for an investor, a bond provider, or just a bank, they're going to be essentially more comfortable, apart from the top 20 airline credits in the world, right, who are obviously kind of as blue chip as lessors. But for the other 200 airlines in the world, the lessor channel is always going to be a better counterpart for the financier. So therefore, in reality, the financier should do those deals, and the airline then focuses on what it does best, which is fly people around essentially.
And maybe moving on to the metal side, right? Your thoughts around the most investable metal, right? So, I mean, the easy answer is narrow body, new tech. Sure, give me all of those, line them up, and I'll lease them all day, and we'll come on to ESG in a moment. But you guys play in more than that, right? Your thoughts on where you're seeing opportunities in the market from a metal perspective, and if you had a wish list on the type of assets you'd like to get into, what does it look like?
Yeah, I mean, clearly the narrow body, new tech, and certainly not even just all of them, but certain types, which are the most popular, will by their nature be the lowest risk and the most investable. But equally with that comes a price point that largely reflects that risk profile. Clearly, when you move into other kind of niche products, whether they're regional, whether they're just the larger or smaller variants of the narrow bodies, or indeed into the wide body space, you are moving into a higher risk profile because there are less of them, there are less customers, and there's more risks associated with the default in terms of transitioning them. So long as you're getting paid for that risk, they can be a very interesting space. And we do have quite a number of wide body aircraft that, together with the credits that we have leased them to, which tend to be the more blue chip British Airways of the world, Iberias and the like, but because of the asset type, you can earn a higher return than a similar aircraft on a narrow body. But you are taking more risk, especially when it comes to the transitioning of that aircraft when it comes off lease, or in the unlikely event with the good airlines that there is a default, but you can never rule that out. Again, we've seen COVID has brought down many good airlines that would not have been expected to default. So there is a higher risk when you move out of those spaces. And I think what we've probably seen in the last number of years is you really weren't being paid for that risk. Whether it was a credit or whether it was the asset type, because of the amount of liquidity, because of the low cost of funds that everybody could tap into. When people were investing in the not narrow body, A320 Neo and A737 MAX 8, when you moved out of that space, you were only getting a very marginal increase in return for what is a larger risk. I think what we'll see now and are seeing now essentially is that if you are willing to move into those kind of less popular spaces, you're getting paid more for the risk, which is the right way. And then you can make essentially an informed decision as part of an overall portfolio where a certain amount of your business and your portfolio is invested in a higher risk space, and you're getting a correct return for that, then that is a very good business model. But if someone is focused on a niche of wide body only or kind of niche product only, clearly if they're not getting paid a huge premium for that, they are taking a much higher risk than the well diversified large lessor does.
And can I get your thoughts then around the cargo market, right? So one that has always been spiky, but we've probably seen a step change post-COVID in e-commerce. Can you question as to the sustainable nature of that? And is it an area that you've kind of looked closely at? It obviously has its own challenges around conversion slots, but just your thoughts on that market and how attractive it is or will become for aviation finance.
I think it is clearly an attractive market, and I think it's a very, very good thing for the entire aviation space, because keeping aircraft flying longer is good for everybody. The engines need flying for longer means more value in the part out of other engines. There's more shop visits happening. So generally speaking, it's definitely a great trend for asset values, no question about that, both wide bodies and narrow bodies. Clearly there has been a shift where everybody now orders everything online, and you can see a time in the future where, kind of in a way, the shop fronts or the shops are really just essentially an advertising window, but almost everything you get is going to be delivered to you. And that's going to kind of, as that comes kind of normal across the emerging markets in the Indonesias, Vietnams, and those countries, there is going to be a continuing demand, I think, for cargo planes to be able to service that space. Obviously, there's been this rush to the market in the last couple of years, and there will be probably some periods of oversupply because of that. But I think kind of with the long-term trend in mind, there is a very big market there for cargo aircraft, essentially, as e-commerce becomes the norm, not just in kind of developed countries, but when it becomes the norm in the developing countries. That's going to be the real kind of driver, I think, of demand for those products that are happening.
And maybe shifting gears a little bit and come this comes if you can keep aircraft flying for longer and longer and longer, the environmental people are going, why, right? And moving on to that ESG piece, and particularly with a focus on the E, your thoughts on the impact of that agenda as of now, right, on aviation finance? It's probably harder to gauge than maybe 12 months ago, as you say, lack of debt and equity raises compared to where we were. But is it actually biting, right? And the nature of conversations you might be having with investors or lenders, how high, is it lip service or is it a real and meaningful thing that you're getting quizzed on?
I think, well, it's certainly a real and meaningful thing that we all are deeply involved in and deeply believe. There's no question that we have to decarbonize kind of aviation as best we can. But it's the as best we can is the point, that right now, as we know, kind of, SAF is one of the few alternatives in reality, but even then, the supply is very, very limited and the cost is very, very high. Oryx is heavily involved in that space, together with Sky Energy and Avalon. We've kind of research work on that, and certainly see SAF very much as the stopgap, at least, in the transition to decarbonisation. So the reality, while obviously investors and lenders are acutely aware of the need for this change, but there isn't really any alternatives. There's nothing that people can do per se. Clearly, many banks in any event only want to fund new aircraft deliveries anyway. So therefore, they by their nature are most environmentally friendly and least polluting. But you've got the case where and there's obviously the whole taxonomy thing in the EU as well, and looking at you're parting out an aircraft when it's young is not also good for the environment either, as we've all pointed out, in terms of the kind of getting the use out of the aircraft, and it's the fuel that is kind of the issue, and therefore putting SAF into older aircraft and into cargo aircraft will essentially help them transition. So there's no question it's real, but there isn't really any
lever to pull, I suppose, right?
In reality, it's one of the most important things we all talk about every day. But as I say, for the lenders themselves, there's only so much they can do. Obviously, the lessors are all, very much involved with doing their own analysis of their own kind of emissions, and many have their own charters. So it's very much front of mind. It's very much what we're all kind of focused on. In Oryx, obviously, with Avalon, we're invested in Vertical, which is the electric aircraft. As I say, we're doing a lot on the SAF space. So there's a lot kind of coming, but as I say, right now, there is essentially no alternative to what we're doing.
And can I probe a little bit in SAF, because I saw that partnership announced. It's really interesting, because you would say, if you look at large lessors, huge knowledge of the space, huge knowledge at raising funding and delivering to investors. What is needed to uncork that in a real way? It seems to be technological developments, but also probably government support. How do you kind of rank the importance of those, and just how near are we to kind of breaking barriers that need to be broken?
Yeah, and look, there's trend setters, and actually the US is really, especially certain states like California, but the US generally is giving huge incentives now for the kind of SAF production and for airlines to move to SAF. That, I think I saw something actually in today or yesterday's Financial Times about the EU kind of are identifying that essentially as a business risk, that if they don't follow suit, they'll get left behind. So I think there's this kind of follow the leader to some degree, that if everybody's doing it, it's going to become the norm. And I think that's what we'll see, is the US first, then Europe will start to offer incentives. I would imagine then that they will follow the incentives essentially with the disincentives. So presumably they will, if the more they kind of give to SAF in terms of credits, the more they will take from traditional aviation fuel, and they can increase taxes on one to subsidize the other. And essentially, if you can the closer you can bring the two, then it becomes a meaningful decision that you're just doing the right thing, essentially. And I think that's where it'll get to, whether it's 3 years, 5 years, 7 years, I'm not sure, but I certainly don't think it's much beyond, let's say, 2030, where in reality, from a economic point of view, that SAF is going to be the only alternative, because of both the incentives to do it and the disincentives to use the traditional fuel.
Yeah, the regulatory stick is clearly coming. Can you ask James, as we sit here in late 2022, in closing, as you look out into next year, what are your optimism levels like?
I think it's going to be a year of two halves. I think the first half of the year is going to be very challenging. The winter traditionally for airlines obviously is the time when they struggle, they're loss making. So I think with their debt levels, interest rates, the dollar, and with the general recessionary environment for consumers where they're going to reduce spending essentially, then we're going to see quite a few challenges for airlines and maybe bankruptcy restructurings. For the lessors, I forecast that the bond market will remain largely closed for the first quarter at least. So it's going to be a tough winter first half. I think second half into the summer, we're going to see China reopen for travel, reduce restrictions. And like we saw in Europe and the US, when those restrictions dropped and people could travel, they have traveled as much as they could. And the 1.2 billion people in China who've been restricted for up to 3 years, I think will be a huge boom to the market, especially in Asia and Southeast Asia, who have suffered the most from the pandemic. Hopefully they'll see one of the biggest kind of benefits essentially from that China reopening. So I think as we get through the summer, then, and most analysts and currency specialists forecast the dollar to start weakening through 2023 and oil to start weakening because of the general slowdown in the world and a kind of recession that's forecast. So I think you see weaker dollar, cheaper oil, China reopening. It's kind of in a way a perfect environment for airlines and leasing companies to flourish. So the second half of the year, I'm far more optimistic, but the first half, I think, going to be very tough.
Well, James, on that semi-optimistic note, I'd like to, on behalf of KPMG and Airline Economics, thank you as always for your insights, and I wish you and Oryx a very successful 2023.
Thank you, Joe, and thank you to KPMG and Airline Economics. It's a great program and delighted to be part of it.